What is up, guys? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. I wrote this short update today, simple support and resistance of Bitcoin update. We're going to go through it, look at the live charts. Make sure to like, comment, subscribe wherever you're watching or listening to this, and check out bitcoinandmarkets.com. Subscribe, and you can get these updates in your inbox. I put out multiple free posts every week, as well as a paid member post on Friday that summarizes the week, and I give you my thoughts overall on Bitcoin and macro. So check that out. Appreciate everybody that supports my work. All right, simple support and resistance. So last week, this is what I said. We were pinching between the 200 and the 20 day. We will take a look at that. And the resolution of that was going to dictate what happened for the next several weeks. And I gave two options, right? I gave a breakdown option or a break upward option. Breaking down, man, we're going to be stuck for at least the next month if we break down out of this previous squeeze. We will struggle to find support on the 50 day around 75,000. And once we get our feet under the price, we can maybe make another run at the 200 day. Well, so far we've followed that breakdown scenario exactly. Price dipped Friday and through the weekend, eventually finding support around the 50 day. The fact that it didn't quite get to the 50 day tells me there's still a little bit of strength left in the bulls. And what do I mean by that? Let's go to a live chart. All right, so here we have a live chart for Bitcoin. You can see the 50 day down here, 20 and 200. It didn't quite get to the 50 day. You can see these wicks didn't quite get down here to the blue line. And that's because there was bids above that 50 day. And the way that I look at technical analysis, I use very simple indicators because these are where the attention is focused. If you guys know anything about game theory, Schelling point, focal points, that if there's something different about a certain object, that's where the attention will be focused, and it will be like a self-fulfilling prophecy. For example, if you are in a competition with another person and you are supposed to pick the same square out of 4, you can't communicate with each other. But there's 3 green squares and 1 red square. Most likely you are going to pick the red square. Both of you will pick the red square because there's something different about it. It is where your attention is focused. That is what these simple moving averages, the most common indicators out there in the world for technical analysis, that's where a lot of the attention is focused. Even very sophisticated proprietary indicators use moving averages in their calculations. So very important. And you can see that we didn't quite get to the 50 day. So that means that there was a bunch of bids right above the 50 day. So if I'm trying to go long as it's coming down, I'm like, okay, well, I'm going to go long when it touches the 50 day. But oh man, I'm going to put it $500 above the 50 day because I want to make sure that my order gets filled. So if it doesn't touch the 50 day, that means that there was a lot of long interest before that. The same thing kind of happened up here on the 200 day. You can see it didn't quite hit the 200 day until the very end. It chewed its way through all of that supply, getting closer and closer. And then finally, it tapped the 50 day or the 200 day right there. And we were talking about this last week, this bouncing around and where that would resolve. Well, it resolved downward. And I said, we could find support on the 50 day. And that's exactly what has happened. Now we're turning back. And since the time of writing, we're up a little bit, almost at 78,000. So this is looking like a little bit more strong of a bounce. Back to the blog post. That's what I'm talking about here on this chart. The bounce has been lackluster, I would say. I mean, it's getting a little bit better now that we just covered that. But it kind of tells me that the price wants to go lower, maybe if it's a lackluster bounce. And if we look at the heat map, there is a lot of liquidity just below the price down to 73,000. And so the price could wick down here, grab some of this liquidity, and then finally go back up. But that's not a huge drop from where we were, 77 down to 73, with a wick and back up again. So I think the odds of that are relatively high. At the moment, I don't expect a significant sell-off, though. As we move to the end of the month, volatility should increase, so I'll be watching out for that. My base case right now is holding in the 70s for 2 or 3 more weeks. Just like I said last week, I said whatever happens with that squeeze is going to dictate what happens over the next several weeks. So we still have a couple weeks at least left in that time frame. And so that's what I'm looking at. Stay in the 70s until we get into June. By June, the 200 day will be below 80, making a breakout even easier. And then the next major target will be 85 to 90 for a couple different reasons. All right. And that kind of shows this bouncing around, extending these moving averages, bouncing around, and then breaking out here in June. Okay, the next section is just a fun little project that I looked at. I looked at some of these longer period moving averages, starting with the 200 day. Now, the 200 day is very well known, very widely used. It is a long term trend, it stands for the long term trend. If you're above it, you're long term bullish. If you're below it, you're in a long term bearish trend. Um, then I also added to that the 365 day. 1 year, obviously, but it's also very close to the 50-week moving average. But on the daily chart, you can put both of these quite easily, the 200 day and the 365. Um, and it's surprisingly accurate. There were some surprising findings in this little deep dive that I did. So as you can see back here in 2018, price bounced between these two MAs a couple times. Tried to hold on to the 365 day right here. But then that was, yep, we're in a bear market, guys. We're not going to recover. Back tested both of them in the death cross of these two moving averages. That's important. Um, and then failed and continued on in the bear market. If we look at 2021, very similar setup. So this red square is in a similar relation to the all-time high as this red square, because this is the all-time high right here. But we saw some relationship before the 365 day held actually, and it recovered to have this secondary all-time high up here, just slightly above the previous one. Then as they came in, there was about to be a death cross right here, but it avoided the death cross, supported price for a while, but then it fell through, came back, tested both of them, the 365 and the 200 day, and then continued on in the bear market. So you can see these two scenarios really are pretty similar in relation to these two moving averages, right, which I think is extremely interesting. Then in 2023, this was the FTX drop right here, consolidated and started the new bull market, tapped the 365 day, came down during the Silicon Valley First Republic banking crisis, touched that 200 day, went back, had a little bit of resistance around the 365, and then continued. So that was an interesting interaction between these two moving averages as well. In 2024 and 2025, we see a repeated interaction with these two moving averages that were very important. The 200 day kind of held down this recovery for a little while, then it popped up, tested support at the 365 day, tested resistance at the 200 day, support 365, a little bit of resistance here, and then finally back up to a new all-time high. We have this interaction here, found support, kind of messed around with the 200 day for a while here, dropped down, touched that 365 day, and then went back up and hit a new all-time high in 2025. So that was an interesting interaction with these two moving averages. And let's go to the live chart. Before we do that, I just want to remind you one more time about the bear markets. So in the bear markets, we had a death cross and a testing of both of the MAs. So yes, we found resistance on the 200 day moving average, but we also had a death cross and a testing of both of them while they were relatively close together. Death cross, relatively close together, back testing, and then coming down. All right, now the live chart. So you can see on the live chart here, yes, we were rejected off the 200 day moving average, which a lot of people mentioned out there on Twitter, I saw, but we're nowhere near the 365 day. There has been a death cross, but we never really back tested that 365 day. It really didn't even matter in this. I mean, you could say there was a little bit of support here, but there was very little interaction this time around with both of these moving averages. So this is one reason why I think once we break that 200 day, out here in June, as the 200 day continues to come down and we break out above that, the 365 days all the way up here, it will be at like 93, 94,000. So that's going to be a good target to have once we do break out. and we're going north again, I will be watching this level in particular. Anyway, I thought that was very interesting. Check it out. And that's going to do it for this one, guys. Check out bitcoinandmarkets.com. Make sure you subscribe, get on the mailing list for free. There's also paid memberships as well. Every Friday, I put out a paid newsletter. So check that out, bitcoinandmarkets.com. Like, comment, subscribe wherever you're watching this. Appreciate you guys for joining me today. Hope you have a great one. And I'll see you guys next time.